Ajay Vora is joining us now. He's head of equities at Nuvama Asset Management. Ajay, good to have you with us here. Thank you very much for your time. Do you own, I want to start with I was discussing with Deepan earlier, anything in the textile space in the portfolio, Ajay? And would you like to own anything there?
So hi Prashant, and firstly, thanks for having me on the show. So the clear answer is unfortunately no. If we would be owning it, I'll be really happy.
Well, you can always decide to now.
Yeah.
Well,
So
you
we have
think
been
it's...
evaluating, but so far we are not owning it.
You're not owning it. What's the new thing for you in that sense? I mean, any new theme, not new, but any themes you've kind of got into or looking at closely or interested in?
So on the other hand, fortunately, one of the names which you just spoke about is something what we own, and that is more on the refining side and not on the textile sector. We believe that the whole refining cycle is looking pretty positive over next 6 to 12 months, and here it's better to play standalone refiners rather than the OMCs who also has the marketing division, because on the refining side we are seeing a lot of capacities getting shut, and the players are getting decent premium because of their slate. So players like Chennai Petro or a couple of other names, they are looking pretty interesting, and fortunately we were a bit early in this trade. Yeah, so happy with that move today.
About tire. Tire numbers have been positively surprising. Everyone knew raw material basket prices coming down, but the extent of the gross margin improvement has positively surprised the street. We saw that in the prior quarters and again this time, CEAT. Is this a space that you like, or do you think the best of the margin expansion is now behind the companies?
So Rima, within tires also, we were owning a couple of names, and fortunately that also has done well for us. You are right that, to some extent the margins are peaking out, but, earlier if you look at the estimates for most of the tire companies, so, if you remember a year back, they all were in the margin band of, I would say, anywhere between 7% to 10% EBITDA margin. So if you look at, CEAT, it was at around 7-8% margin. And yesterday they reported 15%. What most of the analysts were building in on a long-term basis was somewhere close to 10-11%. And when I say long-term, I say 2-3 years. But considering, now they have reported 15%, and even if there is some sort of, raw material pressure because of the crude moving higher and the rubber prices moving higher, I still feel that even if it settles closer to say 11, 12, 13%, the overall trajectory in terms of the balance sheet improvement, in terms of the growth, looks pretty interesting. And if you then compare that with the valuation, they are still not at the peak valuations. So although, next couple of quarters, you can see some sort of margin pressure, but not to the extent of, what it would have been earlier. So I think that, they are still a decent bet from current levels also.
All right, tire is a decent bet. You often have the knack of, identifying things which turn out to be big movers. I remember at the start of the year, you said that you were positive on the way the rail infra is moving. At the same time, the defense space, big moves we've seen across, all the railway stocks and the defense stocks as well. What are your thoughts on those, and where do you see the next move?
So the railway space is still looking very interesting. I think it has more legs from here on as well. And, this has always been a stock picking kind of a market. And therefore, we should be really stock specific when we are, identifying stocks within a theme. But I think that, considering how government have picked up on the spending side, so just to put some numbers into perspective, 5 years back, government used to spend closer to 50-60,000 crores on the sector. And today they are spending closer to 2,30,000-2,40,000 crore. And as a result, we are seeing more better platforms, better trains and electrification, and all those things are happening. I think this is a a really long-term trend. Although certain stocks may be really expensive over there, but I think if you are better at picking newer ideas who can benefit, because the size is pretty small for a couple of players in terms of where they are operating right now. So the growth rates can be quite exponential. So I think railways as a theme is still looking very interesting.
Sorry, just to, you said standalone refiners. What's the story? Is it, I remember there was a shortage of end products, diesel at one point about 6 or 8 months back. I think that got largely resolved. is it strengthen refining margins, which is expected to sustain? I mean, because when these stocks start to perform, I mean, they can give you, we've seen episodic 50-60% runs very quickly. Are we in for one of those phases, in your opinion?
I hope so, Prashant, and that is what our call is. The underlying thesis over here is that, most of us, we look at the GRMs, and the way the Singapore GRM gets calculated is a bit different with a very different slate. The 40% petrol and all those things are there in that particular slate. But if you look at our standalone refiners, they are heavy on the diesel side, where the cracks are somewhere close to, $32, $33. And if you look at, the way the whole average of the slate turns out to be, their GRMs can be much higher. And we feel that, going into next year, if the way the refining capacities are getting shut in China, you can have a clear up move in the underlying GRMs. So our sense is that, all these companies, if you look at, a stock like Chennai Petro, for example, eventually the potential EBITDA can be, I would say, similar to what the market cap is right now. So I'm saying that is the kind of upside which one can have with the cycle, and one need not fool ourselves, because honestly, these are all cyclical businesses. So you have to be very agile when you are investing into them. But I think if the cycle sustains and maybe it gets better from here on, the upside, as you rightly said, can be pretty sharp.
You're absolutely right. I was just looking at last year what MRPL did. It opened 2022 at $40. The year high was 130, from 40 to 130, and it finally closed the year at 56. So if you bought on the 1st of January, you saw 130, but you basically made $10. So yeah, I mean, hopefully
it's still 25%, right?
You're like 2022, people would scoff. But hopefully this is more structural, right? Ajay, you're saying?
I think, I wouldn't say structural like 3, 4, 5 years, but I at least feel that, over 12 to 18 months, the cycle gets better from.
Okay.
Ajay, any calls of yours which haven't worked? And what, according to you, played out which is different compared to the thesis that you were expecting?
So honestly, we are in the business of some right and some wrong.
Of course.
So I think that, within banking, if you see, and maybe in hindsight, what we have realized is that, the whole space is so overowned that in spite of, a couple of names reporting really good numbers, maybe the stocks haven't done that great. So, if you look at the whole market structure, the two largest sector have their own challenges. So on one hand, IT, which is completely global linked, till the time US doesn't, bottom out in terms of growth, and which is what, the general expectation is, we don't see a major growth revival over there. And on the other hand, the banking was something where, we did make good money over there. But after a point, in spite of companies reporting good numbers, we are not seeing that kind of re-rating. So I strongly feel that is mainly also because in the near term, obviously, over longer term, stocks will follow earnings. But at least in the medium term, I think because of the over ownership of the sector, stocks haven't done well within this space.
Do you have thoughts on the fertilizer space? I mean, we were just discussing a big move coming by on a lot of these names.
No, we don't track it closely.
All right, hang in there. We have some story coming in. Learn from sources that the government might be considering minimum export price cut for basmati rice.